Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting. Can I please get a screen and audio check at YouTube? Thank you, Marty. Hope you're all doing well today. This stream's about integrating Bookmap order flow tools with auction market theory using a volume profile as a chassis in the intraday developing time frame. It is based on structured trades that are available to all of you to research and reverse engineer. And all of this is available at no cost in the Bookmap Discord Trader Lab community. In case you're visiting for the first time, the Trader Lab is a community of like-minded traders who come together to leverage their collective experience. It is a large community, and it is a business-oriented community. The business of trading, depending how long you've been doing this, is potentially not what you would imagine it to be. And the word imagine is very important here because we come into this business with beliefs. And I'm going to challenge you regarding your beliefs, because what we believe to be true is based on our life experience and our primal wiring. However, the business of trading is really quite different. And if you can't differentiate between fantasy and reality, you might be pursuing something that's not based on the actual business you're trying to create sustainability in. So that's why I created the Trader Lab, is to help traders learn the business and then reverse engineer processes that may give them a statistical edge. And that's the whole idea of this, is to create potential sustainability. In other words, your own business. And if you're interested in that, that's why Trader Lab exists. So thanks again for visiting Trader Lab. And like everything in trading, general disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. By the way, grab a pen and paper. We have a couple things to talk about today. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. There's a lot of structured trades that happen that are based on Trader Lab methodology that I've shared. Of course, like everything in trading, you have to find what resonates with you. And the reality of this business is understanding it's a statistically based business. It's not a be right business or predicting what's going to happen. It is really more about alignment. So if you can define the condition of the market, you can at times create alignment. Now, before we go much further, I have to mention something too. There's a contest going on, if I can find that I have to mention to you at the top of the stream, because you don't want to miss out. If you're interested in getting your hands on Bookmap, which I think would be pretty cool, you can earn 3 months of Global Plus and either stocks or futures data for free. And all you got to do in the month of August is put together some screenshots of your setups, annotate them, circle arrows, why you took the trade, how it worked out, and then just post them. Hashtag free blue jacket and post them on X, Instagram, or LinkedIn. That's it. You don't have to register. You're not going to, nobody's going to take your email address and throw it out there in interworld, right? It's just something simple, but it gives you an opportunity to use Bookmap. Now, the other part of it is, if you don't have Bookmap, you can still participate by accessing a free digital version of Bookmap. You can download it at bookmap.com. And if you're interested in more information on this contest, go to bookmap.com/blue jacket. And it's right there, over there. There you go. Now you know. Now, let's talk about the condition of the market, and I want to give you some statistics. Now, this is yesterday's up to yesterday, not including today. So we're going to get into this, but let's talk about the condition of the market. We opened in this area. Now, this is not the open. This is done before RTH, so I don't. Well, actually, let me see if I have the open. Hold on. Got to go looking for it. So far away from where we are at the moment. Around 64.07 and change. So we opened right in a gap right up in here. And this is going to be pretty darn important. We're going to talk about what this is all about. This is auction market theory, but let's talk about what we did. We opened out of yesterday's range, and that means that the market is out of balance. Balance is when it's accepting an area. When it opens out of balance, it means there's a change in the perception of value. Now, of course, the next part is, what now? Do we just gap and go? Or do we gap and fill the gap and we get sellers? And you're going to have both, of course. But at some point, one side or the other may be dominant. So we have to take the trades based on how they show up. So let's look at the condition of the market. We're opening out of range. So what's the first part? Do we go up or we go down? Now, I know you all just fell out of your chair, but the question becomes, do the buyers take the ball and run with it, and now there's a change in the perception of valuation? Or do we get the buyers and maybe shorts from in here getting squeezed, no way to know, and then do we find our sellers? And the answer is in hindsight. So you don't know. Isn't this exciting? Did you ever stop to think that you can't predict what's going to happen? You can only anticipate what might happen. So the question becomes, is the market responsive? Now, initially when it opens, if it's initiative, that means new buyers come in, then you go with the long side. If it changes and we run out of those buyers and now the longs that are in there are on the hook, then we can turn the barge around, as I call it, and go the other way. And of course, whatever happens, and everything in between, right? So that's what we know. And we're going to come back to this context sheet, and I shared this in TraderLab. Now let's look at statistics, and you have to vet these for yourself. We opened higher outside of yesterday's RTH range. I think we can accept that. We're opening here. And so what are the probabilities? Well, there's something called the overnight volume point of control. A point of control is where the highest volume took place in the ETH is the overnight volume point of control. And that was 64.08. So we're opening around 07 or whatever it was, 08. And then we have the ETH high. So overnight VPOC, 81%. ETH high, and I'm rounding them off. You got to vet them for yourself. 79% probability. Previous high, 67% probability. The first hour's high, 62% probability. So initially, we're favoring the upside. Getting to the previous point of control, which is way down there at 63.71, is a 38% probability. Taking out the ETH low, we'll get to that, is a 39% probability. And let's see what else. There's one more I want to. Oh, the overnight low, 39%. I didn't say that. So everything is skewed initially to the upside. So coming in today, the idea is what? To go long. Now, let's look at what this is. This is what I call higher time frame, you might say. So it's really the swings or the bigger, these are RTH candles. These little yellow boxes are where 70% of the volume took place. This is really auction market theory. It's like what's too high, what's too low, what's retail. These yellow lines are the highest volume on any individual RTH session. So let's think about this a little bit. If in 63.03 was an important price, we came down here after this is this big gap, and we left the gap. We found too low. This was the retail price. Now here you think, oh, we're going doing the Acapulco cliff dive. Instead, we gap up. We test 0.75, which is a high volume area. Think retail, and this may confuse you if you're not familiar with this. Don't worry about it. Too low. That sets up the long. And then the target for the long was 74.50 on this day. And we didn't quite get there. This is what we call life in the fast lane. And what does the market do? The market goes up to go down. It goes down to go up. It goes up to go down. It goes down to go up. Then it goes up to go wherever and apparently down. Now, let's look at levels. This is where the auction, I think, shows its magic, at least for me, because I don't use indicators. I kind of use participant behavior. That's me. Not saying that needs to be you, but I threw the indicators in the waste bucket, I should say, because they're random. And unfortunately, the market's random. Why do I need random inputs? I decided years ago that using a basket of spaghetti and throwing it against the wall always gave me winners, but I was always trying to fix it. Why would I want to fix it? Because it is random, but the environment's random. So if I put randomness and combine it in a random environment, what do I have? I think that I'm going to be nice about it. Garbage. I'm gambling. Well, if I want to gamble, I'll go to a casino. And then I know I'm buying entertainment because I don't have an edge. I figured out that in this business, we have to be the casino, not the gamblers. This is too low. That's too high. I come down here, this outside edge, too low. And now we're taking this high out, trying to go there, and we miss it. 1 second, please, guys. I got to take this quickly. Sorry for the interruption. So what happens here is, so we missed this target, but this day we picked this high, which has a high probability, and we're going for this. C'est la guerre. Off we come. This day we open and we test the retail price here. It's the low of the day. And what was our target for yesterday? Take out the previous day's high, which is there, and then test this price. That was our target. And those of you who follow the stream, that's the deal. Now what? We open here. Now we're going to go from here. What then do we know here? 6406 is the highest volume in here. And basically, auction market theory is really shopping. So if you know how to shop, you might know how to trade, or at least understand why the market does what it does. Doesn't mean you'll be able to trade, unless, of course, you develop an edge, and you can do that in TraderLab. Now, let's look at the locations. Overnight volume point of control, retail price. What's this? The 06, key level. What do we have above us? Let's just take a look here, and I got to turn some levels off here. ETH high, high probability, and the gap. In 1 second, I got to turn a couple things off here. 1 moment. I use Investor RT, and I export levels into Bookmap. So they update in real time, low volume node. All these levels are automatic, and so is this. However, now that I'm over here, this is current. So this didn't exist at this time. So that's why I'm turning them off. And then if we get into real time, we'll put them on. So now there's a couple things we anticipate. When you have a gap like this, if you're long from yesterday, and now you're going to get the champagne on ice, the possibility is we're going to get something called responders. In other words, responsive selling. Responders are not strong sellers. They are profit takers. So what we want to do initially, because of the gap, and we don't know, remember with the gap, what it's going to do. Is it we're going to gap and go, big gap, or are we going to gap, go, and fail? So I don't have the answer to that. Maybe some do. Me, not so much. I just kind of attempt to get an alignment, and like you, I take stops. Oh, you didn't think, does anybody take stops? Everybody takes stops. Why do we take stops? Because we're looking to get positioned in alignment with the plan, and we are also looking to preserve our account because everybody gets out of alignment or takes a stop. Trades work statistically, not predictively. So right here, RTH open, right here. So I'm looking for a long. Now, where am I going to get long? It's a great question. Well, I know this has a high probability. Let's go back to the statistics. The ETH volume point of control has an 81% probability. And getting to the ETH high or low has almost a 98% probability based on the lay of the land. And the ETH high on its own has a 79% probability. Remember, you got to vet this for yourself. So for me, it's longs. So there you go. So let's start. So market opens. I'm going to show you structured trades. Now there's other trades, obviously, you can figure out. But for Trader Lab participants, this is a business of building a business. So how do you build a business? Well, you don't have to make it up, but you do have to vet. That means you have to find what speaks to you. Now, 06 is an important level. It's on the chart. Overnight volume point of control. Remember the statistics. This is why I use statistics, and you have to vet these. 81%. Right here, I did not hit it yet. So I have an 81% probability and whatever, a 79% probability at the overnight high. So why wouldn't I get long? Well, here's my responders. So I see these guys. Now I'm going to get into microstructure with you. Now this is not, I go over this, but this is not where developing traders trade. It's where you observe behavior so you can learn and develop unconscious competence. But this is actually a structure that I use and I share in Trader Lab. But this is like after you do everything else and you're a profitable trader and you're consistent and you've dealt with your emotional or psychological impediments, which, by the way, we all have. So, welcome to trading. That's the most important obstacle. I believe anyone who comes to Trader Lab can learn how to trade. Being able to execute and be disciplined is the real issue. And I'm sure you're not going to believe me because you're going to think I just want more setups. But if you can't execute them, you don't need them. You need one. Does that sound like not enough? You need one. If you can't do one, you'll do none. So concentrate on one. I hope that makes sense. By the way, if you have questions, please post them. I can't see them at the moment, but I will come up for oxygen. Damien, do you have Bookmap? So this is too high. I call this a variable high volume node. And what it is the market, when it opens at the RTH right here, RTH open, 8:30 Central Time, there's no volume. So the first volume that comes in, this is the yellow line. It's called developing volume point of control. And what is the auction about? What's a fair price? What's unfair? Why does the market go up and down, you ask? Why doesn't it just park somewhere? Because it's an auction. What is too high? What's too low? And the market rotates in all fractals and time frames. So right here, this price is too high. This price is too high. You'll notice the volume is increasing here. Of course, it just opened. This price is too high. This is now the retail price. And I'm right here even with this level. This is important level. That's why it's marked over here. So I opened here. I got a high probability here and a high probability above. For me, no short. Me, long. And good luck. So this, let's just watch. I find the buyers here. 73 sell stops came out. Thanks for playing. Let's look. Market's going down. And I'm sitting here with my jaw on the ground, of course, because I don't know what it's going to do. Do you know what it's going to do? I don't know what it's going to do. So I have nothing to do. I'm looking at the selling. And part of me, the lunatic, as I call it, is going, gee, you should have got short right there. Because that would be a short under different conditions. But it's not a short. It is a, what's going on? Liquidity. Here's my icebergs. So this is absorption. Now let's look at what you see here. This is delta. So I've got my sellers. You'll notice I get buyers here. And that gives me my counter rotation. What's too high? That's too high. That's too high, right? Yeah. There. Resistance. I'm looking at this because if I cross over, I'm thinking about, well, if I find too low and I cross over, I'm looking to get long. And I have a key location here. So all of this is looking for longs. And my teeth chatter because where's the bottom of anything, you know? Let's watch. So this is my current retail price. It's right here. Let's just watch. VPOC migration. Going to zero, Lewis. And again, I'm going, oh, you should have sold it. Should have. Now, what is that voice in my head? I'm sharing what goes through my mind because I know you think the same things. Hindsight, as they say, is 20/20. And how does it apply to us? Not only do we see things in hindsight, but we are always questioning in hindsight what we quote should have done. Well, shoulda has nothing to do. What you should have done always is know where your trades will or might show up and what you will do based on your plan, not this. Even though if my plan was different, this would be a short. But I want to get long. Why? Statistical probabilities are favoring the upside. So I'm taking a pass on this. Just letting you know. So let's look. Too high. So too high, too high. What happened here? Too high. This is VPOC migration. I'm following the yellow brick road. That's what I call it, the yellow brick road. And yes, we're not in Kansas anymore either. We're trading. And this is not the world you grew up in. This is its own unique environment. This now is the new retail price. Everything says right here, still going south of the border. I'm looking for a long, and my mind is saying, you shoulda. Who's speaking to me? I call that Hyde, Jekyll and Hyde. So what does that do? If I'm thinking I shoulda got short, then I'm going to be feeling FOMO. I'm going to talk a little bit about it today because now I'm feeling I missed a trade and the lunatic is saying you shoulda. Well, when I'm feeling loss of opportunity, now I'm thinking I got to get it. You ever have that thought? That's trading, guys, and that's your emotional triggers. So what do I know here? Right here, I've got my VWAP and my mid is here. So as far as I know, this is resistance. This is resistance. This now is the retail price. What might happen here? Break below it, going south, and I'm feeling FOMO. Remember, not trading FOMO, feeling FOMO. Watch. Sweep. This right here is a potential indication, not indicator, indication that potentially we can revert. Now let's see what it does. And again, there's my VWAP. How many of you just automatically sell the VWAP? Now, of course, you're going to have winning trades. But what happens if you're not in alignment with the condition of the market other than on a short-term basis? And I'm not saying everything works, right? Right here, I come across. So now I'm looking at this and I'm going, this might be my trade. Now I have the mid, and I got to go back. Hold on a second. I got to see where I took this trade. A long time ago, this morning. Hold on. Let me just find this. 5, 6. Because I want you to, where is it? Just like to share this stuff with you. Okay. This is resistance. Remember? I'm not paying that. We leave. We come down here. Sweep. This puts the antenna up. I've got my icebergs. I've got absorption. Now, here's the thing about absorption. When you see your sellers, is the market going down? What's it doing? Well, all I'm seeing is sellers. Sellers. Why isn't the market going down? Yeah, it did go down. But why isn't it going further? What else do I see? Less selling delta, less. So I've got the market going down, and this is delta divergence. You know, more sellers, less. Now look at this. This is the delta. I have a lower price, and I got less. Why is the delta less? Well, I have aggressors, but I only got 4 sell stops coming out down here. So I have less market orders, and I have absorption. That's what I know. Now, I can't pick the bottom of anything. It's not my skill. I don't try to do it. What I know is this is too high. So I come here. This is resistance. I hit it. If I got long here, which is not my trade, this is my resistance. I'm using the auction. Now let's keep going. Now, got to find, where did I get long? Let me come back here. Oh, that's pretty amazing, actually. Well, doesn't matter what I do, you know. I got long in here. This, and stop was below this. Scale was here. And then I'm going for this. Scale. And by the way, part of this has to do with the opening swing. High is here, and I have a high probability, right? To get to the overnight volume point of control going on, it's 81%, and then the ETH high. So that was my trades. I'm just doing it, you know. Now, VPOC migration. Let's look at this. And there's another trade coming up here. So right here, this moves up. And if we're using the shopping experience, this is good news. But what I need to happen here, there's 2 possibilities. I can go up, or, and now I know this is always gives you a thrill, I can rotate, and then I have another trade in here, which becomes mean reversion. So I'm inside multiple time frames, as you'd think of them, but I call them fractals. So let's assume at the moment the higher time frame is up, okay? And let's assume at the moment we're long, which we are, or I am. And if I get this, then it's suggesting this is the new retail price. Why? Because there's more volume here than there was down here. That's why it's shifted. What's the language of the market? This is too low. Well, if it's too low, now I got a new retail price. And as far as I know, it's going north. Now, I only have runners on at this point. So what does this suggest? If I come outside and this is the retail price and the trend is up, I have longs in the Trader Lab, which are called mean reversion longs. So long, and then the joy becomes we have structured trades, and this is how it works. It's outside in. So subject to your plan, you could just be hanging out, working on your crochet, or if you don't have a long, you're looking for a long out in here to come back here. That's the reversion trade, and then out the top to the ETH high. Sweep. What did we see before? Sweep. North. What do you get here? Sweep. Counter rotation. Now sweep. Where are we? Mid, VWAP. And where does this trade fail? All the way down here. So this mean reversion is challenging only because where's the outside edge? So this is where I'm trying to go. So let's look at this trade. What's this? Variable high volume node. Long was here. So we have a potential long here. The trade fails under here. Or you get your absorption here. I took a long here. I took a long here. I took a long here. This shifts down. My teeth chatter. And this is my resistance. So this was my scale. Then I'm going for out the top to the ETH high. Okay? Now, this, it was hasta la vista, Tom. Thanks for playing. We'll see you later. Now, change. This now is too high. I have to mark it. Variable high volume node. So this is where things get dicey for the longs, very dicey. And some traders in Trader Labs shorted it. Now, that's advanced. For developing traders, I always suggest you take one primary side. That's it. Now, 95.96 is a level from the ETH. It was called a single or a low volume area, an outside edge of a distribution. Let me give you just a quick explanation. If the market comes outside, and in the ETH, this was the retail price, I can come outside and come back there or there. Now, this, and it's still mean reversion. Now, I know I'm getting into multiple concepts here, and you might get nauseous, so I apologize. I took a long here, and it's a reversion plan because I know I can come back here. So I took a long, and this is a little more advanced only because I'm integrating the ETH. So I took a long here just to go there. And then if I can come across, I can come here and still out the top. Just saying. And when this happened, I almost lost my breakfast. But this is what I was leaning against. And then this happened. I got my scale, and my next target is here. And if I get out the top, I get out the top. Let's look. 12 is the next target. Can you guys see something, some kind of methodology at work here? Long, there, to there. And then one for the road, as they say, which was the ETH high. Are you guys with me so far? How we doing? Please give a like if you're finding this interesting. What I'm doing, guys, is I'm showing you structured trades. What I'm showing you is this is not a video game. You don't make it up. I mean, if you are, I hope you have fun, but you're a gambler, and gamblers don't sustain themselves in the business. Maybe you'll be the exception. We all think we're special, but when you're gambling, guess what? You go to a casino, you might win a hand or two or three, but over time, the casino extracts the dollars from the gamblers. Is it going to be you? Well, if not today, tomorrow, maybe. And that's all based on your results. The reason I created Trader Lab is to help traders understand that if you create structure, you know where your trades will show up before they get there. And there's no precision. There are areas. By the way, are you guys hearing ringing noise in YouTube and or Discord? I've got my ears getting blasted here at the moment. Anybody hearing any ringing? You are hearing ringing? Is that right? Just say yes, ringing, so I know what we're talking about. No ringing in YouTube. How about Discord? You heard the ringing. Okay, hold on. Let me see if I can do something with this. Maybe not. Yeah, it's the bell. Okay. Let me see what I can do with this. Hopefully this will stop it. Let me know if it's still there. I'll get the hammer out and, So this is the last long to here. I had runners, and the runners got taken out. Still, so far for the day, it's been a good morning. Now here, and notice the liquidity comes into the book. Now here, everything turns. So right here, when this happens, now I'm out of alignment. Now let me tell you what that means. All these trades have all been profitable, So, okay, now what? Well, the condition of the market is changing. When I get under this level, I'm now falling out of the ETH distribution that I was using to come back where? To there, to there, to 12. Remember 12, our good buddy. And now break. Okay, now what? The condition is changing. Notice what's happening with the volume point of control. Too high, moving lower, too high. Break, moving lower. So now, if I go back to my context sheet, which helps me, is we opened out of range in a gap. The market's out of balance. Initially, the market is moving higher. Is the market responsive? Well, initially it was, but that gave us the opportunity for longs. But what's happened to the buyers? Hasta la vista, thanks for playing. They get a coupon to the buffet. And now we're turning the barge around, as I call it. Now, I'm not quick to turn around. What I suggest to developing traders, and I operate the same way myself, is to get in alignment with the market. So when the market changes condition, for me, once I'm not in alignment, I don't have a trade. I'll get stopped out or I'll get out of whatever happens, right? That's random. Now what I want to do is turn around and only be taking shorts. So no more longs, and now I have to wait for a short. Well, how do I get short? You're going to say, well, I'm going to go, what do I do? What do I do? Let's look. What do I do? All right, I'm under here. This is the last place I had my buyers, right here. Okay, this was my long, remember, long. Failure here. Let's look at the failure. Now, it doesn't mean you should be doing this. All this means is you can identify where the buyers were, right? Here, let me show you. Let's look at a trigger. Now, there's a lot of material available in TraderLab. Not only the TraderLab community, but a library of webinars, a document section, and you're all welcome to it. So right here, it's chop. What is this? It's a consolidation. My sellers are there. You can see the icebergs. You see the buy stops. These are limit orders. These are market orders. So I see the green bubbles. What's the green bubble? Buyers. And they are stops. What about the red bubbles? What are they? Sells, stops. What's taking the other side? It's an iceberg. It's under there. What's over here? The selling icebergs. And that creates a consolidation. So, we always have buyers and sellers. There's the aggressors and there's the passive side. So what I know is here, and you can see the bracketing. So all I'm doing is showing you something. This is an auction, and I call it a fractal. What is happening here is the behavior is generic in the sense of how the market operates. So whether we're talking about the whole day or pieces of a day or just rotations in a short time frame, if you will, in a fractal, this high volume here is the same as that high volume there. By the same, I mean it's the same behavior, but different time frame. So if this is now the new retail price, and my buyers are here and my sellers are here, and then I get my buy, my buy trigger, if I come back here, this was too low. It becomes support. And let's look at the behavior. See what happens here? This is support. It's the same as that. That's resistance. So if I get long here, and I was long in here, but let's say you got long on this thing, you're scaling here. So that was my trade, except I took it over here, and then over here, I almost lost my breakfast. And then we go up to our targets. I'm just showing you. But now, look what happens here. If that's support and the buyers were here, where'd the buyers go? We're out of here. We're going to see you later. We're going to send you a coupon. Now what? Support becomes, and this is a deep concept for this astute group of traders, resistance. Sweep, counter rotation into a sweep. What is this? This is an advanced process. It is a trigger. It is a short. And whether or not you want to deal with that, that's up to you. Now, there's more. So what is happening? Well, first of all, we're doing the Acapulco cliff dive. At 9 a.m. Central Time, we have something called the IB30. And there's a statistical probability that if we take out the first half hour's low, there is a high probability we can take out the first hour's low. And remember, in the statistics I share, and you have to vet these, there's over a 98% probability we take out either the first hour's high or low. Given the fact that we failed on the upside, it's only shorts, right? So now if you're in Trader Lab, what are you going to do? You're going to turn the barge around, and once you're under here, now if you don't take this short, this is a bit more advanced. This is where the context breaks, if there's any doubt in your mind. Now it's shorts only. Now the next area is this, for a potential reaction. And I'm not going to, this is from the ETH, and it's a variable high volume node. One of those things I was showing you, when we were going up, variable high volume nodes. That's your shopping. Once I'm under here, which is a higher time frame location, and I'm under this, and I'm below this, it's no more longs unless it's in your plan. And for me, there's two ways to play this. Short to here, or hang out and then look for counter mean reversion. Remember the long I took for the continuation trade, which was an outside in VHVN up to, I think, 12, and I was looking for the ETH high. That is all gone, right? Now, the mean reversion. If the trend is now down, maybe, then it's the opposite, mean reversion. So now it's shorts going the other way. And we have the gap and more. Okay, so shorts, let's look. Let's look at this. Remember, you have a short here, you have a sweep here. Now, this might not be a trade you can do. The idea is to try to get outside, out in this area somewhere, to come back towards this statistic. Let's see if we have a place to get in. I got to look and see where I got into this thing again. I'm trying to look at where I got in, because I look at this now and I'm going, where'd you get into this? It's like, can't tell. 910. Right. Hold on, guys. Oh, okay. Oh, I didn't get in. Okay. Until actually got in here. I don't remember how I did it. Oh, here it is. Trigger. Let me show you. Remember I showed you up above, too high, too low. The retail is there. Okay, that's your retail price in this structure. This is a consolidation, and I like consolidations because I can see it. I can see where both sides are active. And I'm bracketing this so you can see outside, outside, retail. So if I'm doing the chopateria, I have a sweep and I only want to get short. Now I'm looking for a trigger. The trigger is here because I break low. This is my retail price. A trigger is here. I test my retail price and I have a sweep. So I got a sweep there. I got a sweep here. All these suggest south of the border. I have an entry there. I got an entry there. And then I'm going for my statistic, over 90% probability, right? Let's keep watching. VPOC migration. Now this is interesting. They're all interesting to me. What is this? Well, what do we know? Let's come back to what we know. Not what, because we don't know anything else. We know certain things and we don't know what's going to happen. Isn't that joyous? This is VPOC migration. What is the language of the market? Everything above is too high. This is our new retail price. I'm going to label it. It's here. So now how do I trade this? You're going to say, Tom, it's moving away. What do I do? In the Trader Lab, this is what we know. This is an outside edge. It's called a low volume node. And if this is the mean, our highest volume, let's go in fractal for a second. This is the mean in here, so I can sell it. I can lean against it. The market reverts to the mean and then leaves, maybe. If I come back here, and now this is the new mean, wherever it is, the yellow line right there. If I rotate outside to one of these outside edges, I can sell it to come back here and to potentially come out the bottom. Does that make sense? This is a structured trade. It's called mean reversion, stressing the word mean. This is your resistance. This is an outside edge. So right here, I'm looking for a short. This is my high volume area. And this is a short to here. And you have to be pretty on your game for this. And you're going for this. And then the ETH low. Remember, over 98% probability, you get to either ETH high or low. This is the naked volume point of control. This is yesterday's retail price. It's a target. VPOC migration, too high. Too high. See it? Sweep, another short. Out the bottom, where to? There for a scale, and then here. Where do we come back? Here. What is this? This is a short, TraderLab structured trade. This is a target, TraderLab target, reversion back to where? I'm not paying that. Remember what I did when I was long and I was heading to 12 for my scales? This is the same behavior. I'm just taking it from the other side. I'm only taking shorts. Where to? To my probability of getting here. And the liquidity at 75. I post this in TraderLab. We're talking about all this stuff all the time. There's a sweep. There's a short. Coming back here. Going here. Going there. And there's more. Target. I think that's the last trade I took. Yes. And target on the price map here. I think that's as far as I got. Yeah, that's it. Sorry, guys, for the delay. This is structured trading. I mean, I don't know. I say I don't know because, I don't know. Is that okay for you? Would that work for you? Can you do it? Does anybody want to do it? ETH is the Globex Java, overnight session. Jordan, time frame, it's fractal for me, the levels. I'm not sure which levels you're asking about, Jordan. I got to turn, this is a sweep. Now, this is the primary objective. You could be done for the day. You could be back in your Barca lounger. Let's come back. Hold on a second. 1 second, guys. I got to turn my investor RT levels back on. So for these high volume and low volume areas, so we can see them. It just helps me because when there's a lot of information here, I can get myopic. So let me get this thing percolating again. This is called a single. This is 63.55. It's the next target. There's a sweep. That's a target. You could be done with this thing. Now let's come back out here. Oh, I didn't tell you about the IB continuation trade. This is structured trade. I don't think I did. There's a couple of them here. Now, I talk about something called structured trades. And what I did was, in my own development, like you guys, you spend years trying to figure out what's going on. And you take ideas and when I started out, technical analysis in the form that it is today was really in its infancy. We didn't have PCs, we didn't have an internet. So initially you're drawing your trend lines, and all this. And then Wells Wilder came out, with all this, and then, you just go down the rabbit hole, exploring. And for me, so I had to reverse engineer and then customize indicators to try to see what was this all about, and everything worked randomly. So I thought my job was really just to make it better, Well, look at that. I used a stochastic, I crossed over, I got a winning trade. Let's do more of that, you know? So, and back then it was trend following and swing trading, 2 to 3 day swings. I used to trade the big S&Ps back then, and that was strictly swing trading. So that was short time frame. Everybody, all my buddies were on the floor. You know, they thought I was out of my mind because there weren't really off-floor traders back then. It was really more of an anomaly. And while you may find this hard to imagine, technical analysis at that time was looked on as voodoo. It was looked down upon because back then fundamentals drove the market. So you'd wait for reports. So everything was report driven. The idea of an oscillator or something, moving average, was like you were really stepping out if you used the moving average. I shared an office with George Lane. He created stochastic. So I thought that was the holy grail. Look at that. It crossed over. This is now so easy. Right. Anyway, I'm just saying, we go down this thing and you get a software package, which we all get, and you got 100 or 200 indicators in it, and they all work randomly. So we believe, and I don't know why we believe this. It's only because nobody tells us different, except if you're here, I'm going to share a belief that I have based on my experience. It doesn't have to be true for you. It's just true for me. That everything works randomly, but they don't have an edge. If something works randomly and I deploy it, or a mixture of elements that are variables. In other words, instead of anchored elements, I'm using a bit of this, a bit of that. It's like a smorgasbord of indicators. Sometimes this does this, a little bit of that. This one doesn't quite do it, but I take it. What do I have? I have nothing. I have random inputs in a random environment. How do you deal with this? How about just change it? Change it to anchored inputs in a random environment. All this stuff is random. I mean, why did it do this? Well, there's an iceberg. What does that do? I don't know. Can I make up something on this? No, I have to know where I'll trade before the market gets there. What do I know about this? Too high. Sweep. I can sell this. Now, I can't sell that. By the time I blink, it's over here. I can sell that. And I have my statistic, right? Now this, and because of 75, if I can break this, I sell this and I can get under here, it sets up the IB continuation trade. Now, this is a structured trade. I created a lot of trades for myself, and some of them I've shared in the Trader Lab because retail traders who can discipline themselves can reverse engineer these ideas. This is a short. And remember, we have a statistic open down here. That's why this would qualify. And again, like everything else, we all take stops. So what do I know? Too high? Icebergs are buying here. That's your counter rotation. But this is too high. This is the IB continuation trade. It's there. It's there. It's there. All shorts. Where to? There. And then, if here, maybe not. Where to? IB continuation trade. You see this liquidity? Now I'm getting into something a little more advanced. This is an order flow trade. And I share this in Trader Lab. Again, what I always suggest to developing traders is isolate a condition. And I always suggest it's mean reversion trading. Let's talk about mean reversion for a moment in fractals. This is the mean. We reverted to the mean here. It's too high. New retail price. I'm not paying that. I'm not paying what's up above. You're a shopper. Traders are shoppers. You know how to shop? You will know how to trade. Then you just have to trade where the locations are. What happened here? Buyers, sellers, sweep, break below. Uh-oh. What does this become? Resistance, lower, target, sweep, counter rotation. To where? Here. IB continuation trade. Liquidity back in the book. What else? Mean reversion. What is this? Outside edge. How do you learn outside edge? This is rotational trading. Fractals. Where's the high volume? This is the retail price. I'm operating in multiple time frames. I'm not paying that. IB continuation trade. Outside edge. Where to? To there. And then if I get under here, who knows? To there. Next target. I don't know. It's on the price map, isn't it? Target, sweep, hasta la vista, finito. Thanks for playing. You see, this is the Trader Lab. You can learn this. I'm not saying you will. I'm saying you can. I'm not saying you'll do the work because most traders don't understand their psychology. They don't understand that the fear, the FOMO, all the stuff that works for us in the outside world does not work here in trading. It is actually the problem. I believe if you come to Trader Lab, you can learn how to trade. I can't say you'll be able to because traders spend times on setup. They don't spend time on themselves. You want to deal with this, you can come to Trader Lab. The Trader Lab community can help you. We all walk in the same shoes. Me too. I've just been doing it longer. 46 years of this, both professionally and otherwise. I've coached a lot of traders. I've trained traders, sat on trade desks, managed trade desks, managed a significant book of business, been through it. And it took me years to figure out why I kept coming back to the same issues. In other words, I would tune and tweak, and I was curve fitting processes, but the market operates differently. And the market isn't like, here's a box, fit the market in the box. The market is dynamic, and it goes from directional to rotational. There are different plans inside of plans. So, I mean, if you look at this, the trend is up. But what happened? The market goes up to go down. The market goes down to go up. The market goes up to go down. The market goes down to go up. The market goes up. This is where we opened. To go down, to fill here, to the 71, then the ETH low. And this 54 quarter, let's come back. Where's this 54 quarter? There. It's right on my price map. It's all laid out before. Now, I don't know what the market will do, so you're not going to know it either. And I know we want to be right. We want to predict it's going to do blank. It do whatever. I don't know. Instead of predicting, which I used to do, I used to think, I learned at the CME measured moves early on. It was classical bar charting. And what's that mentality? It's going to do this. Oh, I got a head and shoulders. Here's the neckline. Here's where it's going. Oh, here's a Fibonacci extension. It's going to do this. Oh, here's Elliott wave. I'm in a what? Wave 1 of 3, wave 2 of what? Elliott wave's great in hindsight. And Fibonacci's as random as throwing a dart at the board. Enjoy yourself. All I can tell you, been there, done that. Darvis boxes, pitchforks. The only thing I should have done with the pitchfork is stuck myself with it a few times so I'd wake up. So all I can say is I've done it. Doesn't mean it won't work for you. Here's the problem. It all works randomly. So you think all you got to do is make it better. I threw it all out the window, and it was really hard to let go of stuff that I spent years working on. It's that old thing, gee, I might get something out of it. I don't use any of it anymore. What I've done is I've stripped it down to anchored inputs. And the comparison is how gaming works, casinos. Because that's the business you're in, whether you know it or not. We're in a gaming business. We're not in anything else. So it's about edge. Casinos only play games with edge, right? You know that, so they play them the same way. Well, what happens if they pay to gamblers? Do they change the game? Do they skip the next hand? No, they just deal the hand. How do they actually make their profits? By extracting the dollars, by playing their edge. They're in a random environment also. We are the same as the casinos. Now, you can either be a gambler because you're making it up and responding to your emotional stimulus, or you can be in business. The casinos are in the business of gaming. Maybe we should. VPOC migration. This is important. This suggests low air, not a recommendation. What's the language of the market? You've been following it, right? Well, if that's too high, that's a short. Now I get VPOC migration. This is resistance, and the possibility exists to test this low or take it out. And it's not a trade recommendation. Where's our next target, you ask? Here and here. Not a recommendation. This is what's on the hip rate. You got to clear this, okay? So even if it just tests the low, is this a workable trade? I'm just asking, what do you think? VPOC migration. What's the language of the market? I'm not paying that. You ever go to the store and go, I'm not paying it. And what do we know about this? Liquidity trigger. And the IB continuation short. And the outside edge, mean reversion. This is a compound structured trade. And it's not a recommendation. Now, what can this thing do? If it crosses over here, it can come back here. If I'm going to sell it, and this is not a recommendation, I can sell it anywhere I want as long as it fits my risk parameters. And yes, I can take a stop. If it comes out here, I'm going to be looking here and here to come back there. So my locations are here, this area. Or it's just going to do the Acapulco cliff dive right from here. And then my targeting is down here. Not a recommendation. By the way, let's go again and look. 54 is a target. The next target is this. This is called value area low, that little box, the bottom of it, because that's where 70% of yesterday's volume took place. So this is the fairest price or volume area. If I get under here, this is the fairest price in a higher time frame for this whole thing. This line, high volume. This one was too low yesterday. We found too high today. When we're under this one, then the possibilities to come here, and, clueless. Right? That's the auction. You can learn this. Now, you're probably going, oh my God, it's too complicated. Give me an indicator. Google Translate, right? And I have nothing against indicators. I just couldn't make money with them consistently. And I always had winning trades, winning weeks, and you think, I got it now. But everything kept breaking down. So I thought the solution, at least for me, was to build trading systems because I was managing across asset classes. So I built systems. And then optimization, take data chunks, a month of data, do walk forward testing. And I did it. I think every 2 weeks, I think I was re-optimizing it because I kept watching the curve break down. So I said, all I got to do is re-optimize. Well, that was the same problem. I just was doing it differently. So I was trying to fix a defective process. So I was trying to make a process work that was not aligned with the business I'm actually in, which is gaming. So I was in the wrong track, but I stayed on it too long because I thought I just had to make it better. Well, problem was my process was not in alignment with the business I'm actually in, so I can't fix a defective process for me. I'm always going to say for me because that might not be true for you, But to build a sustainable business, we also have to look at what isn't working. If you're using random inputs, you're going to be more challenged by your fear and your emotional stimulus. In the Trader Lab, the idea is to vet trades that have a statistical edge. So you know where your trade is, you know where it might show up out here, and it can do anything, right? If it comes out here, it can squeeze, it can come to VWAP. If I'm looking for a short here, I'm going to be looking here, anywhere, and I'm going to look for triggers. And then this is my target initially. It's called mean reversion, and we joke in Trader Lab, yeah, it's mean. And if I can get below here, and then, of course, my next area is going to be before the low of the day. And then the Hail Mary pass is potentially value area low is the next one. And here. So it can do any of this. And here's the other part. It doesn't have to do it today. It never has to do it. This is trading. Okay? You guys got questions. Hope you're doing all right. Jordan, there's a whole library of webinars. I'm getting a question. Have you ever made a video of drawing out the levels? Yes. Everything is in the Trader Lab. Let me show you this, guys. If you're not familiar, Trader Lab is a community of like-minded traders that have come together to leverage their collective experience. It's about the community. It's not about me at all. I'm just somebody who's been doing this longer than most of you. Our senior trader has over 50 years. That's nice. There's a lot going on here. A lot of work has been done by everybody. Data mining. Now, this is an advanced process. Now, when I say advanced, let me tell you what it is. There's no indicators. Now, you can use any indicator you want, but if you don't understand market mechanics, you're letting some price-based derivative think for you. How about understanding how the market works and why it does what it does? And you're still going to have random outcomes. But if you have a statistical edge, does that do something for you? Does that mean you'll have more confidence? Because you know, even though the outcome of any individual trade is random, you know you have a tangible edge. When we don't have tangibility that you can touch, all we have is emotional triggers. In fact, we have a psychologist who, in Trader Lab, who talks about the hormones and the stimulus. Do you understand how your mind works? I'm going to bet most of you who are listening today don't understand what you're pushing against. The biggest obstacle to trading is not setups. We got them in Trader Lab. What the obstacle is controlling yourself. How do you get control? If you don't have a metric that is tangible, all you have is emotional triggers. And those emotional triggers will swamp your consciousness. So that's why when you say, I'm not going to bail out, I'm not going to move my stop, I'm going to take it, and then you don't because of fear. Why is that? Because you're wired for that. So instead of, it isn't about willpower. Willpower is a wonderful thing, but it's not going to work. In my opinion, works sometimes. Most of the time it doesn't work because of our fear. Fear triggers hormones, cortisol, and other elements. It's not my specialty to talk about these things, except to tell you about the things you already know, but you don't understand. Tangible metrics, something you can touch, that you can open your trade manual to, and if you're in Trader Lab, you would have that if you do it, would go, gee, I have a 54% probability of getting risk neutral before taking a stop if I take this trade. This trade has to have range to qualify. Where's my outside edges? Well, there. And who knows? If I take a short, if it doesn't have the range, it doesn't qualify. If it comes outside, and then I can get my risk off here, because I vetted it, then I know I can go wherever, and then it's trade management. If you don't have metrics, you have fear. And here's what happens when you have fear. You have hesitancy, and you're looking for confirmation. Does this sound familiar or feel familiar? Feel. It feels familiar because we're wired to avoid risk. Well, what are we doing here? We're taking risk. Well, what the heck? How do you trade if you're wired not to? You're pushing against primal wiring. Problem. So what do? Well, if I know the trend or context is down, I only have one way to trade, and that's short, unless I'm a counter trend trader. And for developing traders, that's the last thing you want to do. You align with the advancing side. You'll have better probabilities. Then where's my trade show up? Well, I already mentioned to you where my trade would show up. 75, outside edge. It didn't get there. C'est la guerre. But what is the market doing? It's going down. If it had gotten to my location and I took the short, which would be to there to get scaled, then I'm hanging out. This is structured trading. I would know not what will happen, but where it might happen. I would anticipate. And this is what I do. You got to anticipate to participate. All this trade is working. The only thing that it did not qualify for only one reason, range. Does that make sense? And by the way, this is the library of webinars. Thanks, Ned, for curating this for us. Everybody ought to give Ned a hug. This is the primary webinar. It gives you a high-level overview. Talks about anchored inputs in the business. It's got about 34,000 views. You might want to take a peek at that. It's about an hour. Meet the Trader Lab. What is this? This is an advanced trader methodology. Now, advanced, I always have to say, oh, it must be complicated. No, this is the simplest thing on the planet. It's just random. That's complicated. So the difference is complexity is not what this is. Randomness. is what it is. There's the catch-22. Operating in a random environment, that's what we perceive as complex. And we try to solve for complexity by looking for predictability or certainty. How about it doesn't exist here? What does exist is understanding how the market works. And then if it aligns with your vetted structured trade, like this would, if it just came up a little higher, you'd be short. And if it doesn't qualify, you're not short. You're working on your crochet, waiting for the next structured trade that you vetted that has an edge. So you want to watch Meet the Trader Lab, Advanced Trader Methodology. Trader Lab is about data mining in the community of traders. You got to leverage the experience of this community. It's not about me. It's really about you. It's not me. I'm just like you. I've just been doing it longer. Stop gambling, start winning. You might want to check that out. And are you trapped in Trader Groundhog Day? That's me, working hard, waking up in the same place. You know, tuning, tweaking, oh, it's good now. And then you get the same. Gap and trend day configurations. Trading the fractals. A deep dive. Auction-based trading on display. There's loads of stuff here. And there's a document section also. You're all welcome to this. Use the link in the bottom of YouTube. There's no cost for Trader Lab. I mean, you guys have probably been all over the planet, right? With chat rooms and gurus, and the only thing you need, guys, come on. I'm only going to say, come on. But again, it's not what's true for me. I've only been there and walked in your shoes, and so is everybody else in Trader Lab. So you just have to decide, are you going to keep on the course you're on? Of course, if you're a profitable trader, come to Trader Lab, share, help us get better. You're never going to be done trying to improve. I watch these streams every day because I'm looking for nuance. I'm looking to see, can I shave a tick? What can I do a little better? And I'm always researching. I'm looking at new ideas to share with traders in Trader Lab. I've shared a lot of things, those 60 PDFs of structured trades, and there's no plug and play, right? You've all done it, plug and play. Just do what Mikey does, right? No, not so much. So, I'm not a vendor. There's no cost. A lot of this is research. I worked with Bookmap developers many years ago with ideas, and some of them are incorporated now into the add-ons, and others end up in the trash can, which is normal for research. I have binders and binders in bookshelves full. I mean, like the old phone books we used to have. You know what those are. But bookshelves, research. So the stuff I've shared in Trader Lab, I picked what I think are some of the more, they're not fundamental. They're actually advanced, but they can be engineered. This is this VPOC migration I've been showing you, right? These are actual trades, and targeting and everything else and whatever, and explanations, counter trend trading, and there's a lot. But there's no plug and play. So if you come to Trader Lab and you're in a hurry, you're already on your way out of the business. You come to Trader Lab, you got to roll your sleeves up, take a deep breath, and make a commitment to yourself that you're going to build a business. And you have to build proof of concept. Here's order flow phenomena, bracketing algos. What do you do with that? I was in a short here, and the bracketing algo raises here and pulls there. I hit the plunger. It's like hit the canopy, blows off, and out you go, and the market exploded up. Order flow. You see? These are just tools. And the thing is, how do you use your tools? How do you create edge? How do you create consistency? Longs, order flow. So a lot of stuff here. But the idea, and this is a targeting, you see, you can reverse engineer this, but what is the key here? The key to this is picking one structured trade. Oh, I guess this short is doing all right, except it's not qualified. Now, if you were short from here, which was the last trade that qualified, you could be done here, and that could be it. Or you're still holding, a runner. I don't know. I can't tell you, but I know 35. What's 35? So I got this and this. This is all before the fact. And again, I can't predict anything. I'm not trying to. I'm aligning. Where's 35? There. This is my primary target. So what did we find? Too high. See you later. Back through here. What was too low? Well, yesterday that was too low, and this. If I come under here, I can come under here, and I can come to 03. None of these are recommendations. You take it one piece at a time. 35 primary target now, if it gets there. Again, not for me to say. Does everybody see the structure and how this might be something that you can reverse engineer? How are we doing in YouTube? Please give a like if you're getting something out of this. I'm sorry, Shava, what was your question? Appreciate if you answer me. What did I do? Oh. Well, Shava, there's a book list in the Trader Lab. And if you're a beginner, I would say take a deep breath. And if you want to be a competitor, think like you want to be a surgeon, or you want to speak a foreign language fluently, be an athlete. Where do you start? You don't start playing in the majors. You have to start somewhere. And you also have to accept there's going to be a steep learning curve. What I'm doing is not complicated. If you shop, you already know trading. Except think about what shopping is. If the price is too high, you won't pay it. If you perceive the price is on sale, you'll throw 3 in the cart. Well, what happened? We got too high. The buyers, we ran out of the buyers. Then what? Now the longs in here are getting run over. Okay, what do we want to do? We get counter rotations. We want to sell it. And then the market's going to keep going down until it finds its buyers. What was too low before? It's here. What does the market tend to do? It's a pricing mechanism. This is the target. And it never has to get here. It's just, so we have this, we got this. If we get under there, where am I? Lost my place. Yesterday's low here. Okay. And that was where we got long yesterday for this whole run up, Think about it. Then you get the gap, and then it's longs, and then it's shorts all the way down. Anybody who shops can learn to trade. The problem for us, besides emotional, is doing the work and not responding to FOMO and think it's a video game. You are going to be triggered. The fight or flight thing is primal wiring. So that's what makes us do things that are ridiculous and not in our best interest. You don't need a lot of trades, and I'm speaking to everyone collectively. This is not a business of action. This is a business of patience and waiting for your trade. If you're in Trader Lab, you know where your trades will show up. You don't know if they'll show up, and they have to qualify like this. This short, which I mentioned to you. I said, we got a short here, but it has to come to a location. What do we see here? This was the last short here. This is a short that did not qualify. Notice how the liquidity is pressing. That's pressure. Now, for me, now what I do is not material, but I'm saying for developing traders, discipline is more important than chasing the market around. What do I know here in the microstructure? Too high. Here. Buyers were there. Sellers took control here. Where's resistance? It's actually there. Now, if you don't have the range from entry to this, you don't have a trade. And where are we trying to go? Well, here. And then trade management. Oh, here, I'm sorry. Value area low. This. Right? And then that. So, just saying. Hope you're getting something out of this. And if you guys are interested in Trader Lab, there's a link in the bottom of YouTube. There is no cost for it. Here's the requirement, though. There is a requirement. It's not romper room. This is about business. The idea for developing traders, and I'm just saying is I've trained a lot of traders over the years, and not all of them are going to be successful. Absolutely not. Because of FOMO, because of, and what does that mean? I want more setups, right? I want more to do. If you can't do one, you'll do none. So the idea is you start with discipline from day one. The job is to vet a trade. In other words, where's my trade? What's my probabilities? Let's watch out here, an outside edge, not a trade recommendation. This is an area. We're just going to observe it. Let's see what it does. I don't know what it's going to do. Let's watch. High volume area, low volume area. Micro high volume structure was there. So what does this tell me? Let's look at this thing. That's the microstructure. This is a fractal. Too low, too high, retail. So here, let me just do this. Now, this is not anything more than structure. So what I do is I trade fractals. And what's a fractal? Russian dolls. Matryoshka dolls. What do I know? I'm not paying that. Microstructure. Where were my sellers took control? Here. So what is this? An area to observe. I'm seeing my icebergs. Let's just watch. It's not a trade, guys. I sit here and take stops. Everybody does. So you got to get over it. It's overhead and cost of production. I'm at an outside edge. Let's watch. I do not call trades. I just say, hey, let's look at this. Outside edge. Sweep. So this is an area of interest to observe. And there's no precision in trading, part of the joy, because we all want precision and we want to know what's going to happen. I don't know what's going to happen. What I know is I've got a location and now I observe it. And now I'm going to look to see if I can tell a side taking control. I have the sweep, I have the location, and I have random outcomes. That's all I got. And if I put a trade on, I take a stop. Welcome to trading. It's overhead and cost of production. Obviously, emotionally, I feel differently about it, but what happens, happens. Just the way it is. We're pushing outside. If we can now remember what was here, this liquidity. So this is an area to observe. We just have to watch the levels here now. But we're pushing outside, so this might be too low. And remember, this was a target. See? Yes. One of the targets. My sellers were here, and I've got my liquidity here. If I pop the liquidity and then come back under it, we might want to be thinking about looking at it. So this is my area, not a recommendation. Everybody takes stops. And guys, don't follow what I do over here because I'm not saying I'd take this trade. I'm observing it. And then I have to wait for what is a triggering structure, which does not exist at the moment. I'm in an area. I'm going to just watch it. So there's nothing going on now. Let's watch. I'm still watching to see if I get absorption here. I've got my buyers, my buyers, my buyers. I'm still seeing my buyers. What I want to see here is I want to see delta divergence. So this is important what happens here. Do I get more sellers here? Here's this liquidity. I'm at a location. I'm just watching. Nothing yet. High volume is here, right there. That's my retail price in this little distribution. I'm still going up. I got nothing going on. Nothing going on. Nothing to do. Now, let's look. This is the retail price. I am reverting now to the mean. So that's about it. Nothing else to do. This is now where the market might go because this is now reversion. So what I did was I checked the outside edge, found my buyers, and either I'm going to come out here, come back down, or Once I come through, then I'm going here. So I don't trade the counter trend. I just, I'm looking to trade an alignment. It might be done. I don't know. Let's look at our statistics if I had anything here for you. Value area low. It's only a 20% probability to get here. So how do you use statistics? Well, the context is the number one driver. The context being down. So even though this has a low probability, and the ETH high had a very high probability, what happened? We failed on the upside, so you turn the barge around and you point everything in the opposite direction. Statistics don't matter at that point. The location in the auction is what supersedes everything. So anyway, this is the mean. So now, nothing to do. But what I do is I look at areas, and then I'm looking for trigger. So this was where it, was kind of like right in here, right? But I didn't get the trigger. If I don't have a trigger, I don't have a trade. VPOC migration. Okay. Variable high volume node. If we come across here, we're going to come out the other side. So we have to watch this right here. So this can give us that, or we're going to continue and squeeze out all the shorts in this leg. And there's more to this, that I can give you in a short period like this. But if you come to Trader Lab, I think, and the thing about Trader Lab is you're not on your own. You're in a community of traders. And the whole point of Trader Lab is that we all are trying to get better. All of us. Me too. And I'll keep trying to get better until I can't trade, because you're never done. But if you're not a profitable trader in spite of it all, you might find some answers for yourself. Doesn't mean you'll be profitable, and it doesn't mean you'll be able to create a sustainable business. It just takes more than plug and play. You have to really understand what's going on, why this might be material, and why we might come here. You need to understand that. And for me, there's nothing to do here. So I just sit back. I just wait. Because for me, if I'm going to get involved, I don't want to sell the retail price. I want to trade back to it in a reversion. This VPOC migration, I have a very little range here. There's no range. So I'm just not going to take a short here, because the best I'm not going to say the best I have, but I might only have to this. So there's nothing for me to do. But I sit here and read it, because it's if this, then that. If this is too high and this shifts down, then what? Then up here and short, or here and short, or out there and short. And I don't trade from the middle. I trade from the outside. That's called mean reversion. If you come to Trader Lab, the primary trade that happens most of the time is mean reversion. And that is outside in. This is inside out right now. So this is outside in, counter trend to the VPOC, right? Mean reversion. You saw me doing that earlier. Well, this is the mean. If I'm trading reversion, I can't trade from the mean. I got to trade to the mean, you see? So then it's outside in. And that's about it. This is the Trader Lab. You're all welcome. Please give a like on the way out. Hope you got something from this. If you're interested in this methodology, it's available to all of you at no cost. The Trader Lab is a serious community of like-minded traders who come together to leverage their collective experience. You're all welcome. While the Trader Lab is still here, and it won't be here indefinitely, you might want to consider taking advantage of it. If you have further questions, come to Trader Lab. You can use the link in the bottom of YouTube. You do have to verify your Discord username. You'll get a little code. You will not be solicited. You will not be spammed. Nada. And remember, Trader Lab is for everyone. The only thing is it's not romper room. So it's about the business. So it's a serious community. And if you're serious about creating sustainability, you might have a good opportunity to move your career path forward. Thanks again, guys. Thanks for visiting the lab today. Please don't forget to give a like on the way out. Appreciate your time and interest.